Welcome to our Tech Trends Update as we are filming on a beautiful day from Sao Paulo. We're here this week meeting with clients, bankers, and investors as we provide an update in person after a volatile month in markets. We continue to get volatility caused by tariff-related news, which had caused a major correction in equity markets in early April, with the technology sector also seeing a big correction. But that quickly reversed as Trump paused some of the tariffs. We also got earnings from the US technology sector, which surprised many investors as tariff uncertainty was expected to potentially temper demand and cause CEOs to bring down forward guidance. Earnings season started out with Netflix, which had strong results and commented that their advertising business has not been impacted by the tariff uncertainty, although the company's advertising business is relatively new with their new ad-based tier, so they might not be a good indication of demand as they are just starting up their sales effort. Alphabet reported next and also had strong advertising results and gave comments regarding their forward outlook where the company sounded confident. Next, Microsoft and Meta both reported on the last day of April and further ignited the technology sector as Microsoft beat expectations in their Azure cloud business and gave better guidance. The company also kept their capital spending outlook unchanged, as press reports had indicated that they might be pulling back on data center spending. Meta had strong earnings and guidance as they too continued to see strength in advertising markets. Surprisingly, Meta increased their capital spending plans for 2025 by raising their spending intentions from $60 to $65 billion to $64 to $72 billion, as they see a huge opportunity with artificial intelligence. This caused many of the companies related to data center spending to rally, which included names like Constellation Energy and Nvidia, which are top 10 investments for the AMS Equity. Lastly, we got earnings from Amazon and Apple. Amazon met expectations for first quarter earnings, but guided to a wider range of outcomes for second quarter due to the tariff-related uncertainty. Apple had the weakest result out of the large tech companies that reported earnings last week. The company's outlook is murky as they have a tariff headwind in the second quarter, which was smaller than expected, but is likely to grow throughout the year as the company was able to take some mitigation actions to lower the impact for the second quarter that won't be repeated going forward. To give everyone a sense of the scale and growth of these businesses, Amazon had close to $700 billion in revenues in 2024 that is growing close to 10%, which is adding close to $70 billion in additional revenue. Looking ahead, Google will promote its I/O Developer Conference on May 20th, while Alphabet will be launching its self-driving vehicle business to more cities, with their service coming to my hometown for now in Miami. We think these events will be a catalyst for the shares and one of the reasons why we moved the stock from our watch list to the top picks. This was a tactical change as there are still concerns about the long-term market share for Google search in the AI world. We will also get the last of the Magnificent Seven to report earnings, with Nvidia earnings at the end of May. We think the results should show the continued strength of AI capital spending from their customers, although offset by restrictions imposed on their sales into China. Clearly, the last weeks have been volatile, and we've been active with the AMS Equity and using the cash levels as a tool to dampen the volatility. We quickly raised cash to 17% after the initial tariff news. We then used some of the cash after the 3-day correction to add to our favorite names and then continued to add as we got better earnings results. We started the month of May with roughly 12% in cash, which is still on the conservative side, but not as high as the peak right after the initial tariffs. Once again, thank you for joining us.
This discussion is intended for informational purposes only. This is not investment research or investment advice, and no recommendation or financial advice is being given. This discussion does not take into account individual investment objectives, financial condition, or investor needs. The views and opinions expressed in this discussion may differ from the views and opinions of other departments or divisions of Itaú and its affiliates.